Well, this stock was beaten down forever. I mean, it has been in the doghouse for years now, maybe even longer than PayPal, but now it is gone on an absolutely massive run and it seems like it can't be stopped. Now look, I know we haven't talked about this stock a lot on this channel. Matter of fact, it's probably been years since we've actually discussed this stock, but it is on an epic run right now. And of course, Wall Street has an opinion on that too. So let's cut through all the hype, all the BS, and let's get you guys the truth. So make sure you like the video if you like getting the truth without the hype, because that is exactly what you're going to get today about this stock. Of course, it's an interesting one. Definitely going to create a lot of tension down in the comments per se, and that's okay. Go ahead and let me know what you're thinking down there in the comments. Obviously, I'll give you guys my opinion on the stock, where I think it's going, and how I handle this stock more importantly. I think that right there might very well be the biggest lesson there. I'll make sure I give that to you as well, because you have to understand that, and you have to understand the lesson there with that, because otherwise you are going to get yourself destroyed and it's not going to make any sense. And so there's a way to mitigate a lot of that risk, and I'll give that to you as well. And don't forget, the Fall Frenzy sale is live, where you get direct access to me. So you could have asked me about this stock when it started its run, or you could have seen some of our members that were jumping all over this stock whenever it was beaten down, seeing the opportunity there. Check it out. It's the pinned comment. We'll talk more about it at the end there, but let's jump into the video and see what Wall Street has to say.
Back on Morning Trade Live, let's focus on Alibaba. The stock hitting a new 3-year high today after CEO Eddie Wu said he expects the company's AI-focused spend to increase above the company's previous $53 billion target. Alibaba also announcing that it plans to integrate NVIDIA's suite of AI development tools into its cloud software platform. So we have got Alibaba shares soaring today after a stellar night over in Hong Kong, up 9.5%. That is also helping lift the likes of Baidu, Pinduoduo up 2.5%, and JD.com also up almost 8% in trade today. So it is a good day for these Chinese stocks. Alibaba, as I said, is the focus of morning trade. Joining us now for a closer look is Schwab Network host Marley Kate. And I suppose, Marley, it's a bit of a case of pick your headline now with this company. But, you know, this stock has been climbing steadily over the last 2 months. I know it's caught a lot of attention from international investors that I've been speaking to, Kathy Wood's funds as well, opening a position there. What are you seeing?
Oh boy, there we go. Kathy Wood bought it there for you. You better pile in, right? I mean, I think she's the classic buy high, sell low on Wall Street. Seems to be the recent track record, at least, in regards to that. But yeah, Alibaba has been slowly moving in the right direction. But that right there is not the key that I want you to focus on with this company. It's focusing on those fundamentals underneath. What the heck is going on with those fundamentals? How has the business been executing through a very, very tough environment? It's not been easy, right? But yet they have navigated it brilliantly, and they have a much harder navigation lane per se, waters, whatever the heck you want to call it there, because of the Chinese government and everything else. Now, of course, we'll talk about how to mitigate that risk here in just a little bit, but nonetheless, they've had a tough go at it, but yet they continue to put up great numbers all the way around. And I mean, you saw the chart right there. It was basically in the doghouse during the entire, way off from its 2021 highs or 2020 highs, whatever the heck the highs were back then. Still way off from that, despite the fact that being a vastly better business today and growing, more importantly, at an incredible clip. But you know, it's Wall Street. Let's see exactly what they're going to say next.
Yeah, much of what you said, Sam, it's a headline-driven conversation when it comes to Alibaba. First they're announcing they're developing their own chip. They saw a boost on that, just in the last month, up more than 45%. Today's headlines continues this AI spend story and indicates just how important it is, sort of right on the heels of Micron's earnings last night, so giving a broader boost overall. Shares up more than 9% right now after it pledged to hike its AI spend beyond the original $50 billion that it had already targeted. The company now plans to spend more than $53 billion developing AI models and infrastructure over the next 3 years. Its cloud.
Oh boy, it went from 50 to 53. Boy, let me tell you, massive expansion there in those numbers. It's just, this is what Wall Street does. They create headlines, they create things, and then they move the stock based upon that. The reality is it was undervalued for a really long time, and they finally started executing underneath on a few things, finally started seeing some things clear up. Obviously, right now, everybody spending on AI is getting a boost in their stock price as well. So that one right there I kind of go with. But generally speaking, it's not like they just announce all this sort of stuff and it's just now moving and all that. A lot of these things were announced months, if not years ago, in some cases, that they were going to do it. But yet Wall Street didn't care then. Now all of a sudden, magically it cares. It's just the games that they play. They'll talk about as if this was new. And a lot of times it's not. It's in our group specifically. It's funny how a lot of times stuff will get posted and reposted on social media from some big social media influencers, from some big accounts out there. Everybody's like, oh, there's a new thing, there's new catalyst coming for the stock, whatever the case is. And then, of course, one of our admins will go back and find the same exact announcement on the actual company's page 6 months ago, a year ago, or go back through the earnings call and pull up the earnings transcript and post that part of the transcript where they talked about it, 3 earnings calls ago, whatever the case is. It wasn't new. It was just the latest trading narrative that these guys are putting out there to justify the trade that's on right now. So that type stuff, I don't really get into a whole heck of a lot because I know it's fool's gold. And more importantly, if you're really paying attention to these companies, you're kind of like, that's not new. That's not, I'm not saying there weren't new announcements and all this sort of stuff, but I bet you a lot of the things that have come up are simply things that they've been executing on in the background for a while. So make sure you're being very, very careful whenever you go news and news is catalyst and all this other stuff like that. A lot of that is fool's gold, guys, and it's for a very, very specific reason. And it's not for you to make a lot of money. I can tell you that much.
Division, which already operates services from the U.S. to Australia, also intends to launch its first data centers in Brazil, France, and the Netherlands. And that's all happening in the coming year, according to the CEO, as well as those plans to integrate NVIDIA's suite of AI development tools that you just mentioned into their cloud software program. Now, this is needed for Alibaba to keep pace, as the CEO says that global investment in AI is going to surge to $4 trillion. Chinese tech stocks extended their rallies along with Alibaba. Shares of Alibaba up 10% when they were trading in Hong Kong, lifting up other Chinese chip makers, ACM Research, which is out of Shanghai, and Nora Technology, both of ACM up 15%, Nora up 10%. And as you mentioned, we're seeing a lot of the U.S. listed shares of other major Chinese companies get a boost alongside here. Baidu, JD.com, KE Holdings, Trip.com Group also getting a big boost. NetEase, Tencent, all moving on this news that they're going to continue this AI spend. Alongside, they also unveiled their largest ever language model, a new language model. That's also adding here as well. But total CapEx expenditure on AI infrastructure and services from Alibaba, Tencent, Baidu, and JD, which are considered the four largest of the Asian ones, could top $32 billion just this year, Sam. That's what Bloomberg Intelligence is projecting, $32 billion. That could be their spend just this year.
Yeah, that's a lot of spend, but I'm sure that there's, actually, I know there's some of our Mag 7 companies right here spending more than that. You don't need to combine any different companies. There's a lot of spend going into all this stuff. In terms of the LLM that they're starting up or trying to get into or whatever the case is, I don't put a lot of thought into that one. They're going to get commoditized, in my opinion. That right there is just going to be like search or something else. It's about how you monetize it. Not necessarily are you going to be better than the other and all that good stuff like that. I think they're going to be turned into something else. And LLMs as we know them right now are just going to be commoditized. Something that just, you have your preference, you use one, and the companies that have them aren't going to draw a lot of money to the bottom line. So that one right there for me, I won't call it a negative, but it was definitely, if it's not part of a larger plan of some sort, which has not been revealed to this point yet, and I want to make that very, very clear, maybe it is, but if it's not part of a larger plan, I don't know. To me, you're just kind of, I won't say wasting your time, but I think there's better ways to use your resources in regards to that. I also understand the operating environment and everything in China is completely different. So it might very well be something that they can monetize in the particular markets over there. But I know, especially here in the US, it's definitely moving more and more towards these are going to get more commoditized. And then it's going to be, how do these integrate with other things? And that right there is kind of going to be where the money comes in. We still got to figure out the LLMs first. And then we can talk about how they're going to integrate with other things there.
Yeah, I mean, they're spending. Everyone just seems to be spending, and they're getting rewarded by the street, it seems. And so, it's no question why you've got Chinese stocks hitting 10-year highs and very much outperforming U.S. equities right now. Marley, Caden, thank you so much. I'll catch you later.
All right, we'll go ahead and stop the video right there. In regards to spending and why everybody's spending and why Wall Street's rewarding it, it's just simply because one, obviously we all see AI in some way, shape, or form is going to be the future. And two, it's a hot market right now. They're going to reward anything that shows you're chasing growth, regardless of whether it makes any sense or not. They're still going to reward it because we're in that type of market to where they're just looking to reward anything and everything. It's just part of being in a risk-on market, part of being in a hot market. Will this change? Absolutely it will. And then you'll start seeing people back off their AI spend. You'll start seeing some folks shoring up the boats per se. You'll start seeing that as well. They'll start cutting workforce. All those other things. We see these boom bust periods all the time. And not say boom bust, but these expansion contraction periods all the time. This is very, very normal. And right now is the time, right? If you're making record profits and Wall Street's going to reward you in regards to stock price for that, then hey, it makes a lot of sense to go ahead and spend the money right now when you can get away with it with investors and not have investors upset that you're burning a lot of money on it. And then of course, as it cools off and as they figure out, okay, yeah, we probably went overboard with this, like everything else in finance, right? At that stage, they'll pull back and then you'll see a more normalized spending on this. Now, in regards to how to own a stock like Alibaba, how to mitigate the risk with that, guys, here's exactly how I mitigate risk with all Chinese stocks. It doesn't matter what it is, which one it is. This is how I do it. I do it by position size. I think Alibaba is a great company, but I would never own as much Alibaba as I do Amazon, for example. Not even close, because I cannot, I want to own the company. I want exposure to China because I believe obviously China is going to grow despite all the media narratives out there and everything else. It's still going to be a contender for decades in the future there. Obviously, Baba is a great company, but I also know that this is investing. This is stock investing specifically, and there's always a discount put on Chinese stocks. I don't know when that will end, but it's not going to be anytime soon. It's not imminent or anything else of that nature. So that's why I limit that right there by position size. I just have a much, much smaller position, and I'm not nearly as interested in adding into it. Obviously, as you can see, Amazon trades at a much higher multiple than Alibaba does, always has, and probably always will. Now, obviously, that gap was like massive like a year ago, but nonetheless, coming into the now and the day, that's how I mitigate it. I keep my position size small so that way I have that exposure there, but I'm not overexposed because there are some risks that just aren't there with a stock like Amazon, for example. And I think they're both great companies. They both have great management teams. They both are executing very, very well. But I have to look at this as an investment, not my personal opinion on China or anything else of that nature. As an investment, the facts are Wall Street will always discount these ADRs, these Chinese type stocks, for a variety of reasons. And so therefore, I need to make sure that I'm mitigating that risk appropriately and mitigating some of the extenuating circumstances that come along with Alibaba with position size. And remember, the Fall Frenzy sale is live. Get your membership where you get your free coaching, free courses, see all my buy and sell alerts in real time, see my complete watch list with price targets, be a part of the best 6, 7, and 8 figure Discord out there. I put 4 or 5 videos a week out there to the group. Guys, there is so much involved. Make sure you check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.